Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Hyer, Client Portfolio Manager with Nasdaq Dorsey, Wright, to discuss small cap strategy heading into 2022. Andy, it's great to see you again. Welcome back to Trade Talks.
Great to see you, Jill. Thank you.
You got it. And large cap stocks and mega cap stocks in particular, like Microsoft, Apple, Nvidia, Amazon, have been doing great in 2021. Do you see that continuing in 2022, or could 2022 be a year where small caps take the lead?
You know, it's been quite the run for mega caps and for large caps. We've seen for the last 5 years, the large caps have outperformed small caps. And in fact, it's one of the largest margins. If I look at the 5-year annualized returns between large caps and small caps, it's right around 5%, which is a really high margin historically when you look at large caps versus small. So I think this is a great question. I think it's something that needs to be seriously looked at and considered as part of an asset allocation. None of us have a crystal ball, but what I do think and what we see over and over again in the financial markets is reversion to the mean. It's been a phenomenal run for large caps, but I think people need to be positioned and prepared for the likelihood that small caps come back.
What are some of the characteristics of environments when small caps have historically outperformed large cap stocks?
You know, one of the tendencies that holds up quite well is that in the first half of recessions, small caps tend to underperform large caps. And then in the second half of recessions, coming out of recession, small caps tend to outperform large caps. And that makes intuitive sense. That is one relationship that holds up really well over time. There's a lot of research out there looking at factors like GDP, interest rates, inflation, and trying to identify what do those factors tell us about the likelihood that small caps are going to outperform. And I'll tell you, for me, a lot of that data and a lot of that research is inconclusive. What I do think we can point to, and what I think to me is a more useful observation, is just some facts about the long-term performance of small caps versus large caps. So if I look at the last 40 years of data, the difference in performance between large cap and small cap is right around 1%. It's pretty close. In other words, they perform similarly over very long periods of time. But you see these multi-year stretches where small caps outperform or large cap outperform. We saw 2000 and 2009 small caps outperformed. I think from a financial advisor's perspective, as they're sitting down meeting with their clients, to me, the most useful observation is just to ask yourself, one, do small caps make sense as part of an asset allocation? And I think the answer is yes for many people. And two, do I have adequate exposure? And if you don't, I think it makes sense to make sure that you beef up that exposure, because 2022 very well could be an environment where we see small caps do very well.
So Andy, as you speak with financial advisors, how do you see advisors position small caps in their clients' asset allocations?
I think, in all honesty, I think it's been an easy area to forget or to overlook, because you haven't really needed it that much over the last 5 years. And even over the last 10 years, large caps have, pretty big outperformance, but there's so many opportunities in small caps. And one of the reasons that we really like small caps is for the types of strategies that we manage at Nasdaq Dorsey, Wright. They're all relative strength or momentum driven portfolios. And one characteristic of a universe that tends to pair very well with momentum is whenever there's a lot of dispersion in returns. And if you look at small caps, one thing that is true of small caps is the difference between the best performing small cap stocks and the worst performing small cap stocks tends to be very, very wide, much wider than the dispersion you see in large caps. And from a momentum perspective, that really helps us drill down and find opportunities. I think advisors, again, to your question, it's just been an easy area to overlook. And I think this is a great time to, the end of the year as we're going into 22, just to take a couple steps back and look at your clients' asset allocations and see if there might be opportunities to add small cap exposure.
And finally, what are some of the reasons that you like small cap stocks or the types of strategies that Nasdaq Dorsey Wright specifically manages?
Again, it really comes down to that dispersion. Whenever there's a lot of dispersion in the investment universe, it really tends to favor momentum strategies. Maybe not in 1 month or 1 year, but over time, if there's a lot of dispersion, it tends to create a lot of opportunities for momentum to drill down, find those pockets of strength, and lock onto those leaders that may be off, flying under the radar for many people. So we really like the small cap space. I think there's a lot of opportunities there, and it's just a good time for advisors to take a look and see, does it make sense to add exposure? And again, for the types of strategies that we manage, we have small cap solutions on both the ETF side as well as the separately managed account side. So something that we would love to talk to advisors about.
All right, Andy, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.